In the United States, some of the products and services that we offer, such as technology, is one of the biggest differences that I see here in the difference between the two. I believe that our technology that we use, which is used not just for the standard property management and accounting services which benefit our owners, but it's really the difference is the resident experience that we have. The resident experience starting with the marketing aspect of a property, and then the leasing aspect, and then while they're a resident. And it's making it easy for our residents. So on the marketing side, you have a resident who has the ability to go online, look at a vacant unit, and through virtual staging have the ability to place furniture to see what it would look like when they live there. We have lead management opportunities so that we can track a resident through the entire process. We also have the opportunity to do the application online applications. So people moving from out of our area, and then also they have the ability to sign the lease, so they don't have to be there present for that. We then have the web portals, which gives the resident the ability to pay rent online and do a service call online and notifications and things like that online. So those are some of the differences that I see between the States and what's occurring in Europe. Our belief is that we're somewhere probably in the 7th inning right now in the cycle. We had the meltdown in 2008. We've come out of that. Some certain markets came out a little earlier than others. I'm in two particular markets that I'm in. We're number 1 and number 2 coming out of the market, the Mid-Atlantic, Washington, D.C., and then the Boston area. And what we've seen now is that through the new construction, because a lot of capital went into the Washington, D.C. market, that the rents have softened there a little bit and occupancies have dipped. They had been for about a 4-year period of time. They had been, high 90s with growth, anywhere from 3 to 6%. In Boston, we trailed that by about 2 years. We're at that point now where we're, high occupancies in the high 90s, and again, rent growth in the 3 to 8% in certain markets. But we know a lot of capital's coming in the market. There'll be a lot of new development that will occur. I think that's typical of what's going on in the markets across the country. Some are just a little bit ahead of others, but we still expect another couple of real strong years.